Right, so the last set of exemptions you will find in Students' Approach to Natural Persons 3.4.5 and 9.3.3, and it deals with purchased annuities as well as alimony. So if we think of annuities, right, we know that it's a special inclusion in gross income. And then what we have is an exemption available for purchased annuities. Now, it's very important that you, when you look at the theory, that you pick up the following. Firstly, that not all annuities qualify for this exemption. It has to be purchased annuities, and it has to be purchased from an insurer. Also, it's only natural persons and their deceased estates and insolvent estates that can qualify for this. So companies, for example, cannot qualify for this exemption. So it's natural persons, and if they purchase it from an insurer. Now, why we have this exemption is because if you buy an annuity from an insurer, you are essentially putting down capital. So you're paying something that is capital in nature, which means there's no deduction for it. So what SARS tries to do is to give an exemption for that capital component so that you are not taxed on something that when you paid for it, you weren't allowed to deduct, essentially is what it boils down to. So we will calculate the exemption using a formula. Formula looks like as follows: A divided by B multiplied by C, where C is your total receipts or the total annuity that you received for the current year of assessment. A is the total price that you paid for it, in other words, the capital portion, and B is what you expect your returns to be over this over the terms of the term of the contract. Now, what that means is it depends on what the contract says. Some contracts run for 5 years, and they will tell you you can expect to receive 10,000 Rand a month for the following 5 years. So if I want to then calculate my total expected returns, I'll go 5 multiplied by 10 multiplied by 12, because that's my total returns. Sometimes the returns are linked to life expectancy. So then they'll tell you, listen, this guy's 60 years old, his life expectancy, and did you know that SARS actually has life expectancy tables? Very interesting to see how long they think you will live based upon your current age and gender. Just something interesting, ladies, we tend to have a longer life expectancy according to SARS than men do. But anyway, back to the calculation, then you will base it on that specific life expectancy. Now, you will see, and in the homework questions, this is really done very well, but there's enough information for you to be able to determine what they paid for it, as well as what the sum of the expected returns are. It's usually very easy to calculate. You just have to know that if I purchase an annuity from an insurer, I will include whatever annuity I receive in gross income by virtue of paragraph A, and then I will exempt it in terms of section 10 capital A using this specific formula. Please note that in the homework questions you will see that they also deal with the commutation of annuities into lump sums. We don't do that, and I crossed it out on the solutions, but you have to make sure that you work through example 9.6 in your Students' Approach to Natural Persons, as well as the Remember block on page 341. Then the last exemption, ladies and gentlemen, relates to alimony or maintenance. Now, don't know if you remember, but when we looked at gross income special inclusions, we said that if you receive alimony or maintenance or allowances on or after the 21st of March 1962, it is specifically included in gross income. Here's the good news. It is then also specifically exempt, right? So if you are, whether you're a man or a woman, and somebody, you're divorced and somebody has to pay you maintenance for your children, you will include it into gross income, but then that amount will also be exempt. Ladies and gentlemen, that concludes exemptions. Please make sure that you work through these videos and that you work through the theory and the mind maps, that you add to those mind maps. I will be creating an online quiz that will happen sometime next week to make sure that you guys are or do understand what you actually had to do. And then just a final thought, and I know that this test for today was probably scheduled, it was very short notice. But I would really appreciate a heads up next time that, listen, we have a bit of an issue, we're writing a test, and it's either just after tax or before tax, or it runs into tax, because then I can make a plan ahead of time, and we don't run into the situation where you now essentially have to work through content on your own. Have a lovely day. Bye.